If you ever receive a question like IA Limited, you've actually hit the jackpot, because it's much easier to criticize a question than to write what should have happened from scratch. The inexperienced and very nervous accountant of IA Limited prepared the trade and other payables note for the year ended 30 June 2015. Let's just say that. Come on. 30 June 2015. You are the supervisor responsible for reviewing all the financial statements disclosures before they are finalized. Below is the trade and other payables note as well as some additional income. IA Limited notes to the financial statements for the year ended 31 May 2015. Trade and other payables. Now it is all about what note? Trade and other payables note. Very important that you have identified that. Good. Now the note look as follows. Trade payables 350,000, sales income tax payable 125,000, sales VAT receivable 23,000, sales pay as you earn 18,900, allowance for credit losses 4,800, mortgage bond 500,000, income received in advance 12,400, and bank overdraft 100,000. All comes to a sum total of 1,124,500. The bank overdraft, the company has an overdraft facility at ITA Bank at the interest rate of 14%. Let's check the additional information. Included in the trade payables is a creditor with a debit balance of 20,000 Rand. The closing balance of the mortgage bond amounts to 500,000. The annual installment is 45,000, and after an amortization table was prepared, you established that the capital portion of the installment for the 2016 financial year amounts to 10,000 Rand. Now, what do we have to disclose as a current liability? Only the short-term portion of the long-term loan. And that short-term portion is not the installment, but only the capital part of the installment, which is the 10,000 Rand. Now, I have a choice here. I can either, that's a method that I prefer, I can either, under current liability, show as a line item on the face of the statement of financial position, short-term portion of long-term loan, 10,000 Rand. Alternatively, IS1 allows you to show that as part of the trade and other payables note. So if I want to show it under trade and other payables, I would have shown it there as short-term portion of long-term loan, 10,000 Rand, and not 500,000 Rand. IA Limited has an overdraft facility of 100,000 Rand at ITA Bank. IA has a positive bank balance as at 30 June 2015 of 25,000 Rand and has no intention of utilizing his facility in the near future. Now, what you have to do, critically analyze the disclosure of the trade and other payables note based on the principles set out in IS1. Now, take a few moments before you continue with the video, pause the video and see how many mistakes can you identify before you continue with the video. Now, the first mistake is quite clear. The financial year is 30 June 2015. In our heading there, we are speaking about 31 May 2015. So that's the first mistake. It should have been notes to the financial statements for the financial year ended 30 June 2015. Now, under that, we should show 2015 Rand, 2014 Rand. Pardon me. So here's no comparative figures. So that is a mistake. Also, there's no indication of the currency, Rand. That is a mistake. There's no indication of the rounding. Now, in this instance, the rounding is only Rand because we do not work in Rand, thousands, millions, whatever. But I should give an indication of the fact that it is Rand and Rand. Trade payables, 350,000, but included in trade payables is a creditor with a debit balance of 20,000 Rand. So what is the principle involved here which is clearly prohibited by IS1? Set off. I'm not allowed to offset any assets against liabilities. So what should I have done? I should have shown trade payables at 370,000 Rand. and the 20,000 should have been shown under trade and other receivables as an outstanding debtor. SARS, income tax payable, 125,000 Rand. Guys, only income tax. What is income tax? Income tax is the tax that a company pays on its profits. Now, according to IS1, income tax payable, not VAT, not dividend withholding, no other taxes, not any other tax, and not pay as you earn, only income tax must be shown as a separate line item under current liabilities on the face of the statement of financial position. So I'm not allowed to include SARS income tax payable in the trade and other payables note. SARS VAT receivable. Now VAT is not a problem, but what the problem is the receivable part. If it's a receivable part, then it means it is not a creditor, it's a debtor. So VAT receivable should have been shown under trade and other debtors. SARS pay as you earn. Remember what is pay as you earn? Pay as you earn is the income tax that the company deducts from the salaries of its employees, and it pays it over to the receiver of revenue. And that is 100%. I can show that as trade and other payables. Allowance for credit losses. Oh my goodness. As that's got something to do with trade and other payables. No, it should have been in the trade and other receivable note. I should have reduced my outstanding trade debtors balance with an allowance for credit losses. Mortgage bond, well, we've already spoken about that. I'm only allowed to show the 10,000 Rand, which is the capital portion of the installment of next year against trade and other payables. 490,000 would have been shown as a non-current liability, and 10,000 would have been shown on a separate line item on the face of the statement of financial position, short-term portion of long-term loan. Or alternatively, you're also allowed to include the 10,000 Rand in your trade and other payables note. Income received in advance, well, that is a trade and other payables, so that is 100% correct. Bank overdraft, 100,000 Rand. Now, they tell us that they have an overdraft facility of 100,000 Rand. Guys, a facility is not an outstanding account balance. A facility is just the amount that the bank will allow you to go into an overdrawn balance. So in other words, you don't have to have the money in the bank, so he will allow you to borrow, in inverted commas, well, it is a borrowing, from the bank 100,000 Rand before he's going to reject your payments. So therefore, the bank overdraft facility, it's only a facility, it's not an account balance. What is the account balance? It has a positive account balance at 30 June of 25,000 Rand. And that should have been shown as part of cash and cash equivalents on in that section or in that line item on the statement of financial position. However, in my note of my cash and cash equivalents, I will mention the fact that the company has an overdraft facility at ATA Bank at the interest rate of 14%, but no utilization of the facility currently takes place. And that, I think, is more or less that. Let's quickly do a sanity check to see whether we have everything. The correct year end is 30 June 2015. There are no comparative figures. The currency is not indicated. Offsetting of assets and liabilities, so the creditor with the debit balance should be shown separately. Income tax payable separately on the face of the statement of financial position. VAT receivable is trade and other receivables. Allowance for credit losses, trade and other receivables. Only the short-term portion of the mortgage loan you're allowed to show. Bank overdraft facility is not a liability, but merely a facility that is available. There's no outstanding debt at the moment, and the information about the overdraft facility should be shown in the cash and cash equivalents note. Short, sweet, wonderful to do. I'm sure all of you would have received at least 8 out of 10.